Let's summarize what we've talked about today. And remember that tomorrow we're going to look at some real markets, real time, that are really happening as this is being videotaped. Today we talked about, number one, what is a trending market, and tried to get a little bit of insight into why it's difficult to follow. It should be easy, but it's one of the more difficult things. We talked, and that is the biggest problem in trading the trend. We also talked about what trades to take in a trending market, and obviously we do not want to feed the alligator. So we would only take trades in the direction the price is moving outside the alligator's mouth. And we talked about where to put stops in a trading market, depending upon whether you are strong long or weak long. And finally, we talked about trading with and without using the Elliott wave. The Elliott wave, again, gives you confidence, but if you don't want to bother with counting the Elliott wave, then go with the alligator. That's it for day 3 of week 11. Here we are at day 4, week 11, and the last 2 days of this week we're going to spend with all 3 of us here, Justine, Tracy, and myself, and we're going to look at several charts. And what we have up here at the moment is the yesterday's S&P chart on a 5-minute basis. And we want to use this chart to show you a number of things, where we would get in, where we would get out, and the various executive decisions we might make. First of all, Justine, would you like to talk about how the alligator is closing in the saddle point here and what that means to you?
When I see the indicators very close to zero and the alligators intertwined, I get more excited about the upcoming move. The market cannot stay for a very long period of time without new information. So the longer it sits in this saddle point, which I'm referring to the AO and AC, the bigger the move tends to be. When I see this, sometimes I will then change my mind. Earlier you've heard me talk about picking some outer fractals, maybe not taking the closest one in. But when I start to see this change in the market, I get more excited and I tend to place my fractal by a little closer. Where the cursor is right now would have been your last choice. You could have backed up to the either previous fractals. You had 1 or 2, that fractal, or you could have even gone back to this fractal. Any of those 3 would have been a great entry, and I also would have bracketed the downside as well, right there. That would have been the first, and maybe that one. You have some choices. It depends what type of trader you are. If you're really aggressive, you would have probably taken the first fractal. If you're not such an aggressive trader, you might have taken the second fractal. You know, we really stress that how you trade is your belief system, and where you get in a market and where you place your entries is all about belief and comfort zones. So at this point, I would feel real good about the up and down fractal, and I would wait to see what the market was going to do. I don't care which way it goes as long as I'm there.
And Tracy, you might point out that this software, these deltas here, are fractals. And Tracy, how would you approach this?
I would approach it the same way as Justine, as when the market entered the balance point or the saddle point. I would have become very interested in this market and would have bracketed the fractals. The middle fractal of the 3 fractals would have been my first entry as well. I would have taken the fractal down, and I would have taken this short signal, would have been stopped out when the market crossed through the red line, and then would have been stopped in long when the blue squat bar there took out the high of the previous fractal. At that point, I would have been long and would have ridden the alligator up as long as it had allowed me to.
And this is also a good illustration of how the computer really makes our job very, very simple. Remember that the green bars indicate that the momentum and the acceleration is up, the red bars of momentum acceleration are down, and the blue bars are squat bars. And let's move on. This is about 8:30, 9:30 in the morning, and assuming that we had bought here and we're still going up, let's move the chart forward to see how it looks. And here this is our 8:30, these were our entries, and the market, we have continuing entries up here. Notice that the alligator has come back into the mouth, and Tracy, how would that affect your trading in this area right here?
Well, at that point, what I've noticed is that we did have 5 green bars.
Yes.
And may have chosen to stop there, and actually I would have chosen to stop out after the 5 green bars because we're still a little close to the alligator's mouth. If we were further away from the alligator's mouth, I may have chosen to use the red line.
Mm-hmm. Another point here is, I believe, as I'm looking at this, I think this is a bearish divergent bar. which we've discussed in the home study program. And Justine, what would you have done here? You're outside the alligator's mouth. You have another fractal up. And whether you got out here or not, what would you be doing in that area?
Would have re-entered if we'd have been stopped out, and I would have been stopped out prior to that. So I would have gotten back in with that, especially looking at the formation of the alligator. The mouth is wide open at that point. You've got the AO is increasing, and your AC is actually increasing. I might probably at that point have put my stop at the green line, though, for a little while. This is the S&P. It's a 5-minute chart. It's a little more aggressive. And again, you had 5 green bars once you were back in. So this is an executive decision. Now, this depends on what type of trader you are. If you were an aggressive trader, you would probably not take the 5 green bar trailing stop, and you would have used the red or the green line. So remember, again, how you get in the market, how you stay in the market really depends on your personality. If you're a long-term trader and you want to hang in there for the most, you would have used the alligator as your stop close only.
This is a very, very good point, I think, right in here. And Tracy, would you say something about how you would decide whether to take the 5 green bars, the green line, the red line, and obviously at this point there's no opposite sell in the opposite direction.
Yes, Bill. At this point, I would be using the green line, either the green line or the red line, and actually it would depend on how I felt that day. And that may seem a little strange, but each day, each trader is going to feel a little different, and they may even be basing their decision upon their previous trades. Not that that's the correct way to do it, but that normally seems to be how it goes. At this point here, I would notice that on the AO oscillator there is no divergence, nor are there any squats up there at that point on the top 3. Well, there's to the left of the fractal there's a squat bar, but the market has gone higher than that, so I wouldn't really consider that as being a squat that's I'm not concerned with that squat at this point. There's no divergence. The AO and the AC are both still up. Now, right beyond that, I'm starting to notice that the AC is starting to turn down up around the 11 o'clock, and the AC is starting to pull down, and now I'm definitely using the green line as my stop at this point here.
Another point, too, also, that the price bars in here are running fairly parallel to the green bars, but up here the price is what we term a runaway market because it's going at a steeper angle than the green line. So let's go ahead, and this is another good point to make, that, and we'll be talking about this next week, is that we all trade our belief system. So how you feel, and one of the important things in this training program is not only to learn how to trade well, but more particularly how you trade well. Let's move forward now and look at what the market does. Notice here, and Justine, I know that you look at this quite often, when the lips start turning down, what does that mean to you?
When the lips and sometimes the balance line is first, sometimes the lips are first, but when I see that angle start to change and they start to close together, I definitely tighten up my stops wherever it was. The S&P is a very volatile market. As we all know, it can move 50 points in a matter of 10 to 15 seconds. So when I saw that, you look down at the AO, you saw a change in your momentum. You started to come down. You've got red bars. Your AC has changed. You've got a couple squats on the top. So I would have been stopped out there. That's fine. You had a nice run. You came up. You followed the market up and got out. And really, I try to just follow the market. I try to follow what I think and what the market's telling me. And the Gator's formation, the more you watch the market and the more you observe the different markets that you tend to trade the most, you'll see the formations and how they change. Every market is different. Some of them have a little more leading indicator, I would say, or I can see ahead of time what I think is going to happen. Sometimes you have no idea what's going to happen. Following the signals is the best way to go, and following your belief system. You have to be comfortable with what you're trading. But when you start to see these changes and you see a squat on the top, you see your oscillator change, you see your acceleration change, I'm then going to pay a little closer attention to the market.
Good point. And from yesterday, if you remember, we were talking about trading with the Elliott wave and trading without the Elliott wave. Obviously, we count our Elliott wave on the momentum chart, and this is a third wave of some degree or another. So we're expecting, particularly since the momentum and the acceleration is turned down, we're expecting some sort of a wave 4 here. Now, if you have an objection to the Elliott wave or just don't like it or think it's too subjective, another way is to remember that anytime the price bars are outside the alligator, you're in some sort of a impulse wave. And when the price bars start intertwining with the alligator, you're obviously in some kind of a reactive wave. So this is about noon on yesterday's trading. And let's go forward now and look at what happened. And Tracy, would you like to comment on what happened between, say, noon and 1 o'clock here?
Yes, between noon and 1 o'clock, a lot of, notice that we don't have the volume up here on this chart, but if you look at some S&P charts, between about 11 o'clock and 1, you'll see normally the volume drop off. That is because a lot of floor traders and brokers are having lunch. Again, that is just something that's in the back of our mind. It's not something that we trade off of. The only thing that we need to trade off of is on the chart. And on the chart, what I am noticing is that the AO has pulled back, as Justine said earlier, and right about 1 o'clock, the market made a new high. That, to me, looks like a divergence between maybe 3 of 3, 4 of 3, and 5 of 3. Notice we do not have the correct number of bars. However, we did not cross 0, but we do not have the correct number of bars. So we cannot be sure if that's just 4 of 3 or if that's the big 4. Once you start looking at enough charts, you can get a feel for if it's just 4 of 3 or the big 4. At this point, it looks like just 4 of 3. So I would say that the top up there right around 1 o'clock is 5 of 3. We're going into the 4th wave here. Again, as Bill said, if you're not wanting to use Elliott wave with the AO, you can use the Elliott wave with the alligator, and the price action is in the alligator's mouth. To me, that is an obvious correction of some degree, and I tend not to trade that area. What that means is that sometimes I miss a good trend, but psychologically I don't get beat up as bad by not getting in the beginning of the 4th wave. Now, I want to get in the end of the 4th wave when I think the 5th wave is beginning, but in the beginning of the 4th wave, I just choose to stand aside, and if I miss a move, that's okay with me, because that's what my belief system is set up, is that I'm going to miss 1 or 2 out of 10, and I'm fine with that.
A couple of points here. Number one is that we're doing this impromptu. We haven't looked at these charts, and we're doing this to try to show you how important it is to make executive decisions, and this is the art of trading. So we think we're in some sort of a wave 4. We've agreed upon that. And this is where most of our whiplashes happen, so we want to be very careful. And Tracy, let's move forward a little bit more and see what happened after this. And here, this is extremely interesting because we have a fractal down here, which when it was hit was below the teeth. We have a fractal here, but we haven't had a sleeping alligator. Now this brings up an interesting problem here. And what I'd like to do is ask Tracy and Justine both how you would trade this.
First, I want to say that first fractal back, this may be confusing to you. That fractal is not formed below the teeth, but where it will be hit is below the teeth, and that's the key. So many times people will call in and will say, well, the fractal was above the red line. Well, the down fractal was formed above the red line, but it was hit below the teeth, the red line. So that is that's your key for fractals up and above and below. You know, many times the markets will do things. We get used to seeing the market. It has the same pattern. I can remember looking at the knife every day and it twisting and turning 6 times before it would break out of the alligator. And then one day I was trading it, waiting, and it just took off. So the markets can do things sometimes that you don't expect. In this case, the gator never shut. It never went to sleep. So this would definitely be an executive decision. If you were aggressive, you would definitely probably have taken that down fractal. If you were a more conservative trader, you might have sat back and missed this trade, which is okay too. Tracy, what do you think?
Actually, I would not have even had the opportunity to trade this market, because all three of us, we can rely on the other person that if they see something in the market to let us know, because we're not always watching the 5-minute bars. At 1 o'clock, as we said earlier, it looked like the market was going into a 4th wave. I would have left the trading room and would have done some other work because the mouth had not even closed there. So I probably would not have come back into the room for 15, 20, maybe even 30 minutes to see if it started to close. And at that point, you can see it's already broken down. So I would not have had the opportunity there. Had I been watching the market, I would have definitely not taken the first fractal, and more than likely would not have taken the second, just because that move there, oftentimes you can see it come down, if it is a 4th wave, to about a 38 to a 50 or 62% retracement, and then come back up. In this case, it did not, and as Justine said, for me, this is just one that I missed.
And you would have been trading against the trend, actually.
Yes, absolutely. You would have been trading against the overall trend, and again, I don't use the Elliott wave in all my trading, but it does help me stay out of some trades. I may not take one just because it is, I think, a third wave, but I can definitely use it to my advantage to keep me out of some bad trades.
I agree with that, and let's go forward and see what happened after 1 o'clock. And you notice that this was indeed a very, very big move down, and the alligator's mouth did not stay closed, and this is sort of unusual. So we don't worry about the trades that we miss. What we're interested in is that the trades that we take be primarily profitable. And again, our whole point here is learning how you trade with your belief systems. So we missed this entire trade here, this entire fall here, and let's go forward one more time, Tracy, on this. And now the accelerator has turned up, and also the momentum has turned up. And Justine, at this point, what would you be doing in the market?
Well, I would be out. Remember we talked about back in week 5 and 6, notice that the AC changed first. You saw it go from red to green. Then you saw the momentum change, and now you've seen the price pull up. I truly would not be interested in trading this right now. I'd like to see the gator sleeping. You've got a number of squats on the bottom. Out of 2, 4, 6, 8, 9 bars, you have 4 squat bars. And I don't see any signals for me to get back in the market at this time. I would just sit back and wait and let the market tell me what to do next.
Good point. And one of the things we might also suggest is that in your material you have Investor's Dream, which is our proprietary software, and you can go through that one bar at a time, and it will list all of the valid and invalid signals, and it's a very good practice piece. Okay, let's go one step further and see what's happening in this fourth wave here. Again, nothing basically is happening. Again, as Justine pointed out before, the mouth is beginning, the lips are beginning to close, but nothing great is happening. Nothing has come across. We don't have a cross zero. We don't have a saddle point here. And let's go one more time. All right, and one more. And this is a typical Elliott wave. Now, this is forming, I think, a much better potential trade than we had earlier this particular day. And Tracy, do you and Justine want to comment about where we are right now on the screen?
I would say right now, you really just said it, potentially we may be looking for a trade. The gator's closing up, the lips are approaching the teeth will soon be probably approaching the balance line, and you're going to see the gator go back to sleep. That's when I'm going to start getting excited again and start looking for my outer fractals to bracket this market and go whichever way the market takes off again.
Tracy?
I'd state that if you'll notice at the bottom, this is overnight here. This is 345. We are speaking of the overnight markets because we do have people overseas who do trade the S&P overnight. It can be very profitable because, as you know, the S&P as well as the currencies and maybe even the bonds move as well overnight some nights as they do in the daytime. As Justine said, the point here, though, is to notice how the mouth is closing. And this is where I would, as I said earlier, I would just leave the screen for a while and maybe come back in 30 minutes to an hour to see if it's really sitting in there. Again, if I miss one, that's okay with me because that's fine with me. That's okay with my belief system. Now, if I'm watching it and the mouth is closing and then I do not bracket the market because I have a bias that it's going up and then it goes down, then I'm not too happy with myself because what I want to be able to do is follow the market.
Good point.
And also remember, if the markets are like a natural phenomenon, I think of the markets as breathing. So they've just had quite a move up and quite a move down. After that, they're going to have to take a breath. They're going to have to sit and go sideways for a little while. That's what we expect to see before the next move.
And one of the things you'll learn when you come to the private tutorial, and you'll experience a great deal of, is very subtle changes in the alligator's personality. For example, notice the whole alligator's mouth here is shutting rather quickly. And is turning over and going the other side. And again, as Justine pointed out, this is kind of unusual. Then look at how the alligator is just gradually closing his mouth here. And remember that the alligator, the longer he sleeps, the more he's going to move later. So let's go forward one bit and see what's happening with the alligator now. And again, it's still sleeping. We don't have a saddle point, but we're much closer to a saddle point here than we were back here when he first closed his mouth. Let's go another time forward. And one more, and again, this is impromptu. We don't know what's coming up here. Are we on real time now?
No, that's still the overnight.
Okay. Let's go forward one more time.
Before we go further, I would like to state that at this point, the first fractal to the left of the screen, the first fractal all the way to the left, one more to the left, CQG is not. The furthest out fractal is where my entry would be. If I were interested in trading this market, if it were a daytime market, we will see markets like this during the pit session. If this were a pit session market, I would have my fractal at that point there because the market has really not closed in the mouth of the alligator.
I agree with you. I do too.
And another thing that's very important is that if I may go back just one time, twice here, notice the move down. What a lot of traders will do, if they miss a move there, they're going to force a trade in here, in this area, to try to catch up with it or try to make up for that loss. I think that's one thing that I've learned from Bill. One of the most important things is not to marry a trade, to divorce it. Whether you make money on that trade or whether you lose money on that trade or whether it's a trade that you missed, forget about it. Worry about what's coming up in the future. And that's where I would have my furthest out fractal at this point. And as Justine said earlier, once that saddle point comes about, then I may choose to take closer fractals.
Okay, I think that's probably enough for you for today. Again, we suggest that you go to Investor's Dream and to go to real-time charts if you have them and look at these and just become familiar with them and become familiar with the behavior of the alligator, because that's most important. Also, don't forget your AT. This is also important to keep your belief systems down, to keep you out of bad trades, and make sure you do your morning pages. And another thing that we also suggest is that you keep a diary on the back of your order forms, exactly why you took the trades, what you observed about the market, and how it turned out. Tomorrow what we'll do is we'll go through some dailies, and we'll do a commodity, and we'll also do a stock practice for tomorrow. So have a good night. Enjoy yourself. We'll see you here in the morning. Well, here we are at day 5 of week 11, and what we're going to do today is go over a couple of charts. First of all, we're going to go to Alliance Capital Management, which is a stock, and this is a daily chart, and we want to illustrate here how we would trade this, and we're going to, Tracy and Justine and I are going to comment about it. And the first comment that we want to look at is, what is the alligator doing? And Tracy, what do you notice about the alligator's behavior in this area?
To me, it's a perfect sleeping gator, and I'm very excited about trading. I also see a saddle point between the AO and the AC.
And Justine, you see the same thing?
I see the same, and I see that over to the left, you've got your up fractal, which is just outside, and you have a down fractal. At this point, you can bracket this market, and we don't care which way it goes, but we know after seeing a saddle point like this that we're going to have hopefully an explosive move. We usually have a pretty good move after we have that sleeping gator. So I'd put my orders in and just wait for something to happen, wait for the market to tell me what I'm doing.
At this point, would you have an order in? Would you have bought that or bought here, or would you be waiting?
No, actually, I would have, from the very first fractal over here.
Over here?
No, the gray fractal, the first one we pointed to.
This one up here.
That fractal is where I would have entered the market from.
Okay.
Remember, I'm a little more conservative than some of us here. I would prefer to avoid a few whipsaws and catch the trend. I'm not saying that I don't take any losses or won't take a loss. I just like to limit my losses. Like I said, I'm a little more conservative. I like the market to prove itself to me. So I will take an outside fractal, and I would have been long there on the green bar. That would have been my first entry into this market.
And where would your initial stop be?
Now that the price has moved out of the gator's mouth, I would have my stop on the green or red line, which are basically the same at that point, right below. If you don't have CQG, you're not going to have the ability to go out into time. So many people have to are using TradeStation and Metastock, so that's where their stop will be. If I had, since I do have CQG, I would be using the green line out in time. Okay.
And Tracy, do you agree with that?
Absolutely, I do. And I'm also noticing while the AO and the AC are both turning up, we're in the green zone. I would be using the red line at this point here.
Okay. So let's move a little bit further. And at this point, looking at this area in here, would you have been taken out, or would you still be there?
I would have been stopped out, and then I would have been right back in with that fractal. I'd have been stopped out on the squat bar you just pointed to, the blue bar.
This one.
I've been stopped out there, and then you notice that the next bar is a fractal.
Yes.
No, to the right. There you go, to the right. So I would have been right back in on the third day.
And notice also that the momentum is now in the green and the acceleration is the green, which is telling you that the market, the underlying structure of the market is going up. Not only is it going up, but it's accelerating up. Tracy, what would be your position at this point?
At that point there, I would also put in the fractal order, which is hit 3 days later.
Yes.
I'm also noticing that on the AO, we're about to take out the previous peak. These bars are now taking out the previous peak on the oscillator, so I feel that I'm in a third wave of some degree. So I'm very comfortable with using the green line or the red line as my stop. I'm also noticing that the AC is working on a peak as well. So I'm not really concerned with using 5 green bars stop here. Whether it works out better or not, I'm still going to use either the green line or the red line at this point.
This is an interesting situation because if you had used the green line, you would have been stopped out at the highest low, and you could never complain about that. If you'd used if you'd used the 5 green bars, if you'd used the green line, and remember the green line and red lines are always stop close only, you'd be stopped out there. If you use the red line, you'd still be in. So again, depending upon how you trade well, these executive decisions, which seem a little confusing at first, after a while get to be almost automatic. So let's move forward a little bit then in time, and let's see what's happening with the market. Tracy, you want to talk about what's happening here with the momentum. You pointed out that this took out the momentum of the previous over here, and now we have an even higher momentum.
Now I'm again thinking that I'm in the third wave again. Oftentimes we'll be looking at charts where we think that we're in the third wave, and that ends up just being 1. Then the new third wave that we think that we're in ends up just being a part of 3, and we're in an extended 3. So at this part here, now it looks like we're in a wave 3, and that's okay as long I'm more interested in knowing if I'm in an impulse rather than exactly what degree of the impulse. If I'm in an impulse, I could actually care less if it's 1, 3, or 5 until the correction occurs. Then at that point it is kind of important to know what was the previous impulse, because if it was 5, then you may not be looking for another impulse, you may be looking for a move down. At this point here, it does look like we're in a third wave. We do not have any divergence in the market, and the alligator is allowing you to really maximize your profits here.
Exactly, and remember that this had a long nap, and the alligator became very hungry for bull meat, and the mouth is still wide open. So we would certainly want to follow any buy signals we got in this area, any of them that the market produced, and we have several saucer signals here. We have some AC signals, and we have a number of balance line signals. So during this area, you would become very heavily invested in this particular stock. Now let's move forward about a month, and we've taken all the signals, or should have taken all the signals in this up move because we're outside the alligator's mouth. And you notice that the lips are beginning to turn here. And Justine, how would you handle it at this point? What would you do?
Well, at this point, you've been pretty heavily vested. I'm starting to see the alligator close, as you just mentioned. If you come down here, we see the AC has changed at this point, and look where your AO has started changing in here. So also you've got a fractal on the top. Now I don't have a squat in here, but this is a squat. So I would definitely have a green line stop. You've been in quite a nice move. The alligator's changing its formation. Your AO and your AC, your mom, your acceleration, they're changing. So I would be ready to be a little tighter, a little more protective here.
Tracy?
Yeah, I would, the exact thing that Justine talked about, that we have a good bit invested. We probably have an average price of about $6 worth of profit here. And with the bearish divergent squat bar, I would be looking to take profit at the green line as well. And as we go out a little bit further, you can see that that was hit on the following day. And actually, we had a little slippage there because it was stopped out a little bit below the green line. But with the move that we had there, that's average and that's fine there.
Okay, let's move forward even more. We think we're coming into some kind of a fourth wave here. And as we see the fourth wave, this is the area that we do not want to trade. And let's go back out into here. Now we've been in a fourth wave for 2 months, actually almost 2.5 months. And we have all sorts of fractals up and fractals down. And Tracy, where would you place your stop here? You've taken profits, now you're looking possibly to get back in or just to stay out. What's your decision?
My decision here would be, because of the extensive third wave that we've had here, I would not really be looking to trade the down move here, because I know that 85% of my losses occur in the fourth wave. And this is an obvious third wave up here, and I'm looking for a possible fourth wave down. I'm not very interested in trading. Now, once the mouth has been sitting for a while, I would then may decide to take a down fractal. At this point, I would take the furthest out fractals, the fractal up here and the fractal down here, and just be very conservative not to go short until this point here. And my up fractal would be here. Justine?
Well, what I had talked about in day 2 this week is how to not trade wave 4s or how to be there for the next trend. So absolutely, I would have a buy here. And as Tracy said, I really don't want to go against the trend. The overall trend is an uptrend, so I'm not interested in trading the A, B, and C in there. Now, if I were determined to trade it and just have to be in the market, this is the area where I would break down to a smaller time frame. I would trade this intraday, because intraday an A wave and a C wave are an impulsive move, so they're going to look a lot like the big third wave we had up. But other than that, I would be looking to go long next, because we know this was a third wave. We need to see a 5 wave, so wave 5 is going to be up here. Now, we never know the length of time a wave 4 is going to be. That's part of the problem. So in the beginning, I absolutely would have my up fractal buy here. Now, as things are going on, and as I start to be able to see an ABC pattern, and I still can't clearly see a C, but I might move my fractal buy down a little bit closer. That's your decision. That's definitely based on what I see in the market and my belief system. But to start off, I'd begin here, and I may come in a little closer because I want to make sure that I'm with the next move, but I definitely want to avoid all the whipsaw areas that have happened in the last 2.5 months.
One point about the Elliott wave in the fourth wave is that the C wave should have a peak on the oscillator. Here's your peak on the downside on the oscillator. This could be A, B, C. We will not be able to be sure of that until we see if the market takes the low at 24 out. If the market does not come below 24 and goes up from this point, this could be A, B, C, a 4. This could be a 1 up, possibly a 2 down, with a 3, a 5 to go up. And as Justine said earlier, may put a closer stop either here or a buy stop even here.
And one other point, since we're talking about where the market is in real time now, as this is being recorded, notice that the alligator's mouth is still pointing downward. The lips are below the teeth are below the mouth. One other thing we'd like to see is that lips and teeth get into the long syndrome before we get up. So we've looked at the S&P yesterday on a 5-minute basis. We've looked now at a stock, the Alliance Capital Management Corporation, on a daily, and what we're going to do next is we're going to look at a grain, and we're going to look at the November beans. Now we have on the screen the November beans, and notice that we have a peak here in the oscillator, which we at this point thought was a wave 3. Notice also that the accelerator was moving up days before the momentum was moving up, and the momentum was moving up days before the price was moving up. So we suspected we were going into a wave 4. And Tracy, how would you handle it at this point?
Well, at this point, if I'm pretty convinced that the down move is a third wave, I would not be looking to trade the correction up. As I mentioned earlier on the S&P chart, because I do not want to trade the fourth wave against the trend, I sometimes miss moves. This is an example of not only I don't miss a move, but I stay out of a whipsaw. If I were going to take the up fractal, I would have been stopped in here and would have taken a small loss. As Justine said earlier, it's not that we don't like to take losses. It's for my psychological reasons, I would prefer to stay out of losses. We don't always stay out, but if we can minimize the number of losses that we occur, psychologically it's very good for me personally. At this point, I would have, looks like an ABC pattern, and we do look for that pattern at times. And once I see that pattern, I also notice that there's a squat up here on the top. And Justine, where would you enter that market?
To enter that market, I probably would have used this down fractal because it's the farthest out of the two. you'd have been back in here. When you got in, you've noticed that your AO has come back to the red, to the downside, and your AC, your acceleration, has also come back down. So all the market conditions are there, and if you look, as Tracy just mentioned, you've got a squat at the top of that C wave. So everything's there telling me to get back in the market. The alligator's wide open. We're in the red zone. You've got consecutive bars, but one thing I want to point out, if you look at your oscillator peak, this peak has taken out the previous peak. So what we once thought was wave 3 is now really wave 1. This is a wave 2, looks like, and this appears to be a wave 3. So if that is true, I'm not going to use a 5-bar consecutive stop here. I want to stay in the trend. The market's telling me it's in a trend move, so I don't feel like I need to use such a tight protective stop. And out of all of us here, are going to use the tightest stops because I am the most conservative. So let's go ahead and take a look and see what's happening. Okay, here we are to current. So not using that 5-bar stop was a really good choice in this, or executive decision at this time, because the market continued down. Now I'm starting to see a little change. What I look at are the lips. I look at the teeth, the lips, and the mouth, the gator. The gator itself is my lead indicator. And I'm starting to see a change of it pulling up. I see we have the peak here, the tallest peak. I see we have a down fractal and we have a squat bar. So I'm going to be a little tighter and conservative, and I'm going to now move my stop up to the green line.
And that's a pretty quick summary, and I totally agree with everything they've said. You have divergence here on the AC, and we normally don't look at divergence on the AC. We look at divergence on the AO, but the AO has turned green now, which means that the market is now, the momentum is up, and it's accelerating up. One good way to practice this and to get familiar with this way of looking at the market is to go to your Investor's Dream, our proprietary software, where you can go 1 bar at a time, and it will show you the alligator into the future. Unfortunately, some data downloaders or some software does not show the alligator out in front. It's very vital that you do have that, because that gives you a pre-indication. As you know, we call this tomorrow's Wall Street Journal, this the day after tomorrow's Wall Street Journal, and this is even further out. So this tells you what the alligator is probably going to be doing 3, 5, and 8 days out, 8 trading days out. So that's a week and a half. So this is about the end of the week 11. Get ready this weekend and have yourself a very good pre-graduation date with your IT, with your InterTrader, and practice and do your AT and your IT and do your morning pages. Next week we're going to spend time on the psychological part, and while you're practicing, we also want to remind you that we're here for you. So if you want to communicate with us, you can do that very easily through email, through fax, and if you need to, through phone. So thanks again, and have a nice weekend. Hope you've enjoyed this week. We'll see you next week.